If you're here for the Norada Capital webinar, you're in the right place.
Yep.
I'm sure we have some podcast listeners, some new people, some people who've never probably talked to us or listened to us before. So we're doing an inflation webinar today. Marco's got a really nice presentation prepared. So looking forward to that. Still got people joining up here. Looks a little gray there in San Diego or in Southern California today, Marco.
Yeah, well, San Diego's your home, but you're not there. You're
Mhm.
3,000 miles away in Maine, so
Exactly.
you probably have hot, sunny weather. No, it's overcast. It's
Yeah.
not raining, but it's not bad.
Typical May gray.
Yeah. And then we slide into June gloom.
Yeah, exactly. 2 months of gray in
Yeah.
Southern California.
Who would have thunk? It's
I know.
California.
Yeah.
All right.
Well,
So
we've started to slow down a little bit here. People come into the room, so I suppose we can kick it off, and we will be recording this, guys. So you'll certainly get a recording. Just keep your eye out on your inbox here in the next 24, 48 hours or so. So welcome. My name is Nathan Hall. Maybe you've talked to me. I always try to tell anybody I'm potentially working with the week before, hey, come to our webinars the following Wednesday. We do live Q&A, we do presentations. So Marco and I like to do these every Wednesday typically, and we might be doing a few more moving into the summer months here. So you might see our faces a little bit more. But again, my name is Nate. I've been with Marco here for 4 years, and it's been a ride. I've seen him grow Norada Capital to really big heights. He started with a few companies, and now is equity owner and partner in 15 plus companies at this point, which we will get into and we'll talk about. My background is in real estate. I've been around the investment real estate world for over a decade. I've worked in private money. I've lent private money. I've borrowed private money for real estate deals. I've worked in and around this realm for a very long time. So it's something that I'm very familiar with, and so is Marco. So that's a little bit about my background. So I don't want to spend too much time on me. This is about you guys and the content. But Marco, if you want to give maybe 30 seconds, I don't know, you could spend an hour talking about your achievements, but 30 seconds on who you are and what you do, that'd be great.
yeah, actually, as you saw, I have a slide in the
You
presentation.
do. Yep.
So let me just leave it for that because then I can just go through the bullets on that
That's
and
perfect.
make it.
Cheers. We can leave it to that. I think that then what we'll do then is we'll maybe take 5 minutes, give a brief overview of kind of some ground rules, talk a little bit about the fund, and then dive into the inflation presentation. Do you have your slides ready to go?
Yeah, I'm ready when you're ready to give me the green light.
Okay. So before we do that, guys, couple ground rules. There is a Q&A box that you can send questions into, right? So don't use the chat box. Please use the Q&A box. So if you have a question, throw it in the Q&A box. Sometimes we'll get to those questions while we go through the presentations. Most of the time we save 10, 15 minutes at the end of any presentation we do to do some Q&A together. Marco and I do sometimes use the chat box as well to throw in some links, maybe to a specific website or a specific business we're talking about. But you're going to see some visual things today, so you'll have access to the names of those businesses and things like that. But keep an eye on the chat box. If you have a question, throw it in the Q&A, and we will get to you as many questions as we can towards the end. Did I miss anything, Marco? Kind of on the overview of the ground rules there.
Nope, it's being recorded. The Q&A can be done
Yep.
anytime. I'll probably go for maybe 40, 45 minutes and then leave the last part of the hour for questions. So it'll
Okay.
work out perfect.
Love it.
Yeah.
So we're gonna dive into Marco's presentation again. It's a presentation on inflation and inflation hedging and how Norada Capital fits into that. So Marco, I'll hand over to you and feel free to take the reins.
Cool. Okay, Nate, thank you. And jump in anytime you want. If you want to
Yep.
interject or add, don't worry about jumping in.
Okay.
But anyway, everybody, welcome. This is great that you're joining. I'm looking forward to this. This is something I enjoy talking about because I don't like inflation and I always like to be ahead of the curve. So this is something that hopefully will be a little bit of education for you. And if you want to deeper dive into any of this stuff, Nate and my team are happy to talk about it. So with that, let me share the screen and I'll do a quick intro for myself and then just dive right into it. So let me do this. Can you see the slide, Nate?
Yes, sir. We can.
Okay. All right, cool. Then it's working. All right. So I titled this "How to Earn 15% Interest and Beat Inflation with Promissory Notes." I'm going to put some emphasis on the inflation piece of it, but the part of the presentation will tie into promissory notes, what they are, how they work, and then it ties it all together with our offering, which are promissory notes that offer a high yield that allows you to meet or beat the rate of inflation, the real rate of inflation. So, and we'll talk about that here in a minute. So with that, let me segue forward and quickly introduce myself. I believe this is recording. So yes, it is. So we're good. So just 30 seconds about myself. Real quick, I'm a two-time Inc. 5000 entrepreneur. Been an investor my whole life. I started actually when I was a teenager, and I've really enjoyed learning everything I can about business and investing and entrepreneurship. And then I've dabbled in pretty much every single asset class. So I started Norada Real Estate Investments, one of the largest providers of turnkey rental property, about 20 years ago. It was in 2004, and we became one of the leading and premier providers of turnkey real estate. Been doing that for a long time. I can't believe it's 20 going on 21 years now. I started Norada Capital Management, I think like almost 4 years ago, but certainly a good 3+ years ago, as a private equity firm, but really an investment fund for investors to invest and be able to earn a high yield. And that means 12% or 15% per year. And we'll talk about that a little bit later. In 2015, I launched Passive Real Estate Investing. It's a podcast about investing in general, mindset through to real estate. And you can find that everywhere and anywhere. Also, the website at passiverealestateinvesting.com. And then, like I said before, I started early. I bought my first rental property when I was a late teen and started slow, but learned fast. And then really hit the ground running hard, almost full time in 2003. And that transitioned through 2004. And that's when I started Norada Real Estate Investments. So I love real estate, and it's one of the best inflation hedges, which I'll talk about a little bit more here today. Last but not least, I want to say I'm a co-producer, which is true. I'm a co-producer in over 10 Broadway musicals and productions, but really that means Norada Capital is, an investor and co-producer in those productions because those productions actually sit under Norada Capital, not under my belt. So it really is part and parcel of Norada Capital's fund structure. And it's a fun thing to do. So if it's something you guys want to talk about, we can certainly talk about it. You can even ask us questions. I know that theater and performing arts are near and dear to Nate's heart, him and his family. It's just something that has been part of his life for a long, long time. So it's something that we really enjoy and have some passion for. So that's a little bit about me. Let me transition. Some of you have heard me ask the question, but maybe not everybody has seen this presentation or heard me talk about it. But usually when I do a live presentation, I ask people to finish the sentence, ignorance is blank. And often what people say is ignorance is bliss, because that's what we've been conditioned to say or hear or think. But really, that's wrong. What do you think it is? I'm not asking you, Nate, specifically. I'm just kind of throwing the question out for everybody else. Answer the question. Do you think ignorance is bliss? Well, for me, the truth of the matter is I like to say that ignorance is expensive. See, the reality is you don't know what you don't know. And what you don't know can hurt you. It can cost you a tremendous amount of time and opportunity. Ignorance comes with a tremendous price. It's worse. What's worse than just being ignorant is that the ignorant people never realize it. And that's not derogatory or negative. It's not saying that, being ignorant is bad. We're all ignorant in many, many things. But what you don't know will hurt you. And, one of my favorite things to drill into people's heads is the cost of ignorance is much greater than the price of education. You really have to think about that. The cost, which is usually in the form of an opportunity cost, is much greater than the price of education, because education can be relatively inexpensive. It could even be free. I mean, think about it. There's webinars, podcasts, all kinds of online resources. Books are inexpensive, 10, 20, $30. And so, it's not expensive to really learn and educate yourself. So just remember that the cost of ignorance is much greater than the price of education. Ignorance prevents learning, growth, and improvement. Um, it's kind of like an expense or a penalty, but education actually enhances your life. It improves your understanding, and it just helps you to become a better person, a better investor, a better whatever it is, fill in the blank. So don't be doomed to follow other people's advice without knowing if it's good or bad advice yourself. And I think that's an important point to really, take away from all this. All right, so let's segue into inflation itself. I like this saying from Ronald Reagan. It's pretty aggressive, but inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. And really, metaphorically speaking, these are all really true, when you think about inflation in that way, in those terms. But really, Milton Friedman hit the nail on the head. He's a Nobel Memorial Prize winner in economic sciences. He's just an amazing person. Wrote many great books, and he really lays the economics out in a very clear, easy to understand way. But one of my favorite quotes is, "Inflation is taxation without legislation." And all that simply means is that inflation is there, it's real, you're going to get it, and you have no choice, no option. You can't vote for it, you can't vote against it. It's just going to happen and be handed to you. And that's just the way our economic system works. It's just an inflationary debt-based economic system, and everything is going to go up in price, whether it's because of supply and demand or because of monetary policy. And usually it's because of monetary policy that over the long term we see inflation eat away at the purchasing power of your dollar. So just keep that in mind. Now, with that said, this slide is a little bit dated, but it's still true to form today. There was a study done over a 2-year period worldwide, asking almost 20,000 adults, what was their greatest concern over a 2-year period. And what was interesting is that the coronavirus at the time was diminishing in terms of concern, which obviously made sense because as the years and months went by, it became less and less of a concern. Um, and employment has been pretty strong for a long time. It still is for the most part today. So because of that, having a job, having employment became less and less of a concern. But here's the interesting thing, almost like a hockey stick on this chart. What we saw is inflation continue to increase in terms of concern because inflation rates were so high and continuing to stay high. Now, if they've come down considerably over the last couple of years, but they're still relatively speaking high. And in real terms, it is still high. And so inflation is still a concern for most people, especially investors. So if you're an investor, think about it. You want to make sure that you are exceeding the rate of inflation, the real rate of inflation, in order to stay ahead. And so you've got to look at your investing through this lens. And I'm going to talk about this more here. Because if you're not looking at investments through the lens of inflation, you're really missing out on what an investment is doing for you, or what it could be doing for you, or if it's doing anything good for you at all. So what is inflation? I mean, this is kind of a common question for people. I think most people, especially you being on this webinar, probably understand inflation to a large degree, but we have to ask the question, what is inflation? Well, inflation is pretty simple. It's really just when the purchasing power of your currency decreases over time, and that could be monthly, it could be annually, but inflation is really just, the loss of purchasing power. And so let's take a quick example. How has inflation changed the price of a typical cup of coffee over time? If you go back to the 1970s, a typical 8-ounce cup of coffee was about a quarter, 25 cents. Over the decades, the price of that coffee increased. It became 45 cents or so, plus or minus in 1980. In 1990, it went up to 75 cents in that decade. And as you can see, as each and every decade went by, the price of that coffee increased. But did anything really change about that cup of coffee? It's basically the same cup. It's basically the same coffee, same smell, same flavor, same, satisfaction. Uh, the coffee didn't really change. The cup of coffee stayed the same. But what changed is the price. See, what you're getting from that coffee, the value you get from that coffee is the same thing. It's the same size, same benefits, same whatever. So the value stayed the same. What you get out of it stayed the same, but the price changed. The price went up. So inflation essentially increases the price of goods and services over time. It erodes the purchasing power of your money by decreasing the amount of goods and services you can buy with it. So you're still getting that same cup of coffee. It's just you're having to pay more for it, more cents, more dollars over time. So that's what we mean by eroding the purchasing power of the currency. So that declining purchasing power is simply reflected by an increase in price. That's why the price goes up, but you're basically getting that same cup of coffee. Now, unfortunately, Starbucks didn't get this memo. Their coffees are like $5, $6, $7, $8 for a cup. So even a basic cup, like just their basic roast in a medium is like I think $4 or something like that. I mean, it's
Yeah.
crazy. It's almost like $5. So Starbucks is now $5. It's just nuts.
Just water through beans. It's all it
Yeah.
is. It's just hot water through beans. $5.
Yeah, it's crazy.
Good margins.
So this is what you have to understand is that you need to keep up with the decreasing purchasing power of the currency in order to stay ahead of the game. So I can go on and on about inflation, but you get the point, and this really illustrates what I'm talking about. So, and this affects everything. Goods and services are affected across the board. Commodities like fuel, metal, food, grains, utilities, transportation, electricity, even services like labor, healthcare, and entertainment. All of these things have gone up. I mean, I remember when I could go see a movie for less than $10. I mean, almost want to say $5. That's goes back many, many years. But now it's like $20 to go see a movie. So anyway, you get the point. So so anyway, we could deep dive into the reasons for this. Often this has to do with an increase in the money supply because the Federal Reserve is printing more and more physical money, and the government's basically giving it away into social programs, and just juicing the economy, putting it into the economy. So that's at the heart of the monetary policy that is causing price to increase. So um, the rates for inflation change, but this is just illustrative. This chart here is illustrative of two things. One is what is the current CPI, the Consumer Price Index, which is the government's reflection or calculation of what interest or inflation is. They constantly change it. They constantly revise it. It's sometimes hard to believe that what their numbers are actual. So there's really two numbers here on the screen. I've rounded the numbers to the nearest whole number, but currently inflation is about 4%. It was as high as 8 or 10% not that long ago, within the last few years. But it has come down, which is good, but it's still around that 4% range. But if you calculate inflation based on the original formulas that they used as far back as the 1980s, like the official inflation rate back then, that calculation is closer to 8%, maybe even 9 or 10%. So there's people out there who calculate the real rate of inflation, meaning that it is the way it was originally calculated using the original formulas. And people like John Williams from Shadow Stats and whatnot, they're calculating it as it used to be, which is how it should be to keep things consistent. So if you use their numbers, it could be 8, 10, and even 12%. It just depends on what you're putting in that basket of goods to actually calculate that inflation. The government likes to take things out when inflation gets high in order to control, and I say that in air quotes. For example, the basket of goods that they use might have a steak, but now steak is so expensive that they'll take the steak out of that basket of the goods and put in ground beef. It's still meat, and it still works as far as a calculation, but it makes it cheaper. It makes it uh, more appealing to the population to see that the inflation is lower because now they're using ground beef instead of steak in the calculation from that basket of goods. So it's easy to fool people, when you can change all the variables within a formula or a calculation for inflation. Anyway, just understand that inflation is here. It's always going to be positive. It's rarely negative. All right. So if you go back to the 1960s and take an average of what the US inflation rate has been, it's about 3.6% going back to 1960. So just understand that inflation has typically averaged between 3 and 4%. I know it was around 2 point something percent not too long ago when we had ridiculously low inflation rates. But again, there are reasons for that. So how do you beat inflation? This is the real question. It's simple, simple to say, not so simple to do, but you just need to earn investment returns that are greater than the actual rate of inflation or the anticipated rate of inflation. If you're looking down the road, a year or two and trying to figure out, okay, what could inflation be, down the road in the future, based on what the government is doing with monetary policy or with what supply and demand is doing with the particular investment class that you're looking at. Because if there are price pressures, buying pressures that are pushing prices up, you know that there's going to be a strong rate of inflation to move prices up. We see this in real estate all the time. So you have to look at the actual or anticipated rate of inflation and then make your investment decisions so that you get rates of return that are greater than the actual or anticipated rate of inflation. So there's two concepts to understand here. The nominal rate of return on your investment is the profit that you earn from that investment before adjusting for inflation, which means it's the face value. So if you have an investment, call it a CD or some sort of money market instrument, it's paying 5%. That's 5% in nominal terms. It's the face value. Yes, that's what you're getting paid. But after you calculate the rate of inflation, that's not what you're going to get. And so that leads to the real rate of inflation. The real rate of inflation is when you take that 5% or whatever the profit is that you're earning from your investment and you deduct or adjust for inflation. And at this point, you can use the CPI, what is being claimed as the rate of inflation, or you can go more aggressively and use the real rate of inflation as it was calculated once before, which will obviously make your rate of return even lower. But the real rate of inflation is what you have to consider as you make your investment choices. So look at the world through this lens. Again, I'm rounding numbers here, but we're going to just call the current rate of inflation 4% for today's webinar. So the basic formula is this. You take your nominal rate of return on your investment and you subtract the rate of inflation, and that leaves you with your real rate of return. It's very simple. Quick examples is like, let's say you're involved in a short-term bond fund, it's paying 4%. If that rate of inflation is 4%, at the end of the year, 12 months later, you're going to have a zero rate of return. It's not a gain, it's not a loss. You're basically no further ahead than you were before. So it begs the question, could you have done better by making different choices? If you're doing something like a peer-to-peer loan paying you 7%, and the rate of inflation is 4%, what is your rate of return? Well, the real rate of return is 3%. You're ahead of the game in 12 months or at the end of the year by 3%. So yeah, you've done okay. It's, you've gotten a real return, but is that enough? So now you've got to start asking other questions. Can I do better? And if so, where can I do better? So this is a key slide for me. Let me just clear my excuse me, sorry. Talking too much and not drinking enough water here. So I'm going to share with you 4 of my favorite hedges against inflation. It doesn't mean that this is an all-inclusive list, but these are 4 of my favorite. And each one of these are really a presentation in and of itself. So we're going to talk about the last one in a little bit more depth after this slide, but businesses have always been a great hedge against inflation for me because viable businesses have inputs and outputs. The inputs are basically either the labor or materials that come into the business that allow the business to produce value for its customer. Again, that could be products or services or a combination of both. But those inputs, those commodities or that labor that comes in over time, is automatically adjusting for inflation. Usually that's going up. So the stuff that comes into a business to operate that business and create an output, those sales that lead to profit from the profit margins it has, those adjust for inflation each and every month, each and every quarter, and each and every year. So as those inputs come in, if the price of those goods and commodities go up, the business has to naturally adjust its price to keep its margins in line. So it's just a natural thing for a business to increase its prices over time in order to compensate for the inputs that come in. And so that's why owning a business or owning shares or equity in a business is good, because a business will always, it has to adjust for the impact of inflation in an economy. So owning a business or being part of a business is a good inflation hedge. The other is obviously a huge favorite of Nate and myself, and our business here at Norada, real estate investments, and just something that everybody's interested in and people talk about, and it's really kind of that go-to investment class. But real estate is a natural hedge against inflation. And what I mean by that is because if you look at what real estate is, it's basically a packaged commodity in a sense. You've got, I call it sticks, bricks, copper, and concrete. If you take those commodities, which always adjust up for inflation over time, those are the things we use to build real estate, to build houses and duplexes and fourplexes and apartment buildings. And so whether it be copper and concrete or lumber, whatever it may be, those again are materials that are the inputs to building real estate. So as those prices go up, naturally speaking, if everything was kept the same, all else being equal, meaning supply and demand didn't change, let's say a real estate market is in complete equilibrium, the fact that those commodities are going up in value will push prices of real estate up. And the reason is because the replacement cost of that real estate has to go up, because if a property got damaged or burned down and it had to be replaced, it would have to be replaced at today's new construction replacement cost, not what it was 5, 10, 20 years ago when you bought the property. And so you have to understand that as the value of commodities go up and labor, the price of real estate will go up, all else being equal. And that's factoring out the dynamics within each and every local real estate market. So real estate is a favorite inflation hedge. Not only that, it's also an income producing asset. So the fact that it not only keeps up with inflation, it generates income and builds equity over time because of price inflation and as well as monetary inflation. So
Yeah, I think Marco chimed in there as well. Obviously, we have a big brokerage, right? It's one of the things I love about real estate is, as you hit on a little bit ago, it's the multiple profit centers, right? I mean, let's say you're a cash on cash return of 10%, inflation's 4%. Okay, so you've got a 6% difference in cash on cash, but if you have equity accrual and you have tax benefits, et cetera, it's a great way to beat that 4% CPI, right? So
and I wasn't even talking about the tax benefits of it.
right,
Just the fact that you can depreciate it for 27 and a half years is
right,
it's also very powerful. I mean, Nate and I can do presentation after presentation about real estate and why it's so powerful and the benefits of it.
yeah,
So but it's not entirely passive, it's pretty passive. You'll have a property manager and it can be for the most part passive, but it's not a paper asset, it's a hard
yeah,
asset. So
yeah,
just keep that in mind. Okay, my third one, I'm just gonna gloss over. You know, you're hearing a little bit more and more in the media about Bitcoin and crypto assets, but Bitcoin specifically. And yes, it is a strong inflation hedge. Yes, it's very volatile. Yes, a lot of people don't understand it. Most people are not comfortable with it yet. It doesn't have wide adoption. But the fact is that if you just look at it from an average annual rate of return, and as far as price appreciation or price changes, it's averaged about 49% per year on average since its inception in 2009. So yeah, that's definitely exceeding the real rate of inflation. But again, it's a foreign thing to most people, having to create, a wallet on an exchange and being able to, convert your fiat currency into a cryptocurrency, et cetera, et cetera. So I just mentioned it because you can't ignore the rate of change in its average price year over year over year. I mean, there are years where it has had massive losses too. Um, it's a paper instrument, and the rates of return can vary all over the place, from literally 0 to 20% or more, just depending on what it is you're investing in with the promissory note, which is nothing more than a loan agreement. And I'm going to start to expand on this here on the next slide, because this is where we're transitioning from my 4 favorite hedge investments. The 2 I think that are most accessible to most people that are on this slide are obviously the real estate and the promissory notes. They're available and accessible to most people, if not everybody. And I say most because with promissory notes, sometimes you have to be an accredited investor. It's not necessarily available to you as a non-accredited investor, although there are exceptions to that. All right, with that, let me transition. So what exactly is a promissory note? Well, it's pretty simple. It's nothing more than a simple loan agreement between two people, a borrower and lender. It's simply a loan agreement. And what that does is it just defines the terms of that loan, the rate, the interest rate, the start date, and the end date. That's pretty much the crux of it. Um, if you've ever signed a student loan, a car loan, a business loan, if you've ever had a personal loan, all of these are promissory notes. They're nothing more than loan agreements. They'll say a note at the top. They'll say promissory note. Every once in a while, it'll say loan agreement, but a promissory note is just that. It's just a loan agreement. Two basic types. There's secured and unsecured. Secured is like your mortgage loan. It's attached to the real estate. It could be attached to a car, it could be attached to a bike, a boat. And then the unsecured is more common in the corporate world where companies are raising capital in the form of debt through a promissory note. And that's usually not attached to any specific asset because, there's a lot of moving parts and complexities to businesses. So those are typically unsecured, but those often, not always, often come with a higher rate of return, a higher interest rate. So, versus a secured note like a mortgage loan that might be paying 4 or 5, maybe 6%. An unsecured note can be 6, 7, 8, 9, 10% or more. It could be into the double digits. And then, the nice thing about a promissory note being a paper asset, a legal agreement, is that they're ideal for self-directed retirement accounts like IRAs, 401ks, Roth accounts. Any type of self-directed account can be a great place to have a promissory note investment in, because now you can get those returns that yield tax deferred, or in some cases tax free indefinitely. And so it's ideal for self-directed accounts, but it doesn't mean you can't use your checking account, savings account, or your company account, whatever it may be, to make that investment as well. So the most common ways to invest in promissory notes are like obviously performing real estate notes that can pay 4 to 6%, as much as 8 or 10 if you're in second lien position or you're a hard money lender. Some investors like non-performing real estate notes where they don't actually pay a yield, but your goal is to buy that note at a discount because it pays zero and convert it into a performing note. Now it has real value, and now you've got a performing asset. Hard money real estate lending has been pretty popular and common. Definitely not for everybody, but that can be 8 to 10 to 12%. Treasury notes, not a big fan of, but that's kind of like 3, 4. I don't even know if they've reached 5% yet, but peer-to-peer lending is all over the place, but it can be 6% or more, just depending on what the investment is and the party you're dealing with. Small business lending is a huge area for promissory note investments, because companies are always looking to raise capital when they're growing, expanding, for operations, for inventory, to grow, whatever it may be. And so this is all over the place. It can be 6% as high as 20% or more. I've seen 20, 25% notes for small businesses on short terms, 6, 12 months, sometimes 24 months, that paid a pretty high rates of return. In fact, I know of an opportunity right now that I'm not invested in, and I'm not, going to be investing in, but I know that there are opportunities out there paying 15 to 20% for, companies that need inventory right away because they can turn it right away. So they'll be able to recoup and pay off the notes fairly quickly. So this is a very common thing for businesses. Now, reasons to invest in promissory notes are pretty obvious, I think, to most people, but I'll just touch upon it here. And that is that, it's one of the most passive investments. It's like, once you've done your due diligence and you've made the investment, you've basically funded your note. It's like set it and forget it. It's going to pay each and every month or quarter or every year, whatever the terms are, until the note matures. And at that point, you've got your principal back. So it's a very passive investment. It's fairly simple and it's fairly easy. There's not a lot of complexity with promissory notes. And it provides a great option for steady returns. If it's a performing note, meaning that you're getting paid every month, quarter, or every year, it's just a steady, predictable rate of return from a cash flow perspective. So notes are ideal for retirement accounts, as I said before. allows you to keep more of your profit because of the tax benefits, whether it be tax deferred or tax free. So keep that in
Mhm.
mind if you've got a self-directed retirement account. And it helps you create wealth for the future, because if you're earning those returns in a tax deferred or tax free account, you're not getting taxed. So whatever you're quote unquote saving in taxes, you can reinvest or compound into more returns, because you now have the ability to reinvest or invest the savings that you've had by not paying taxes, if that makes sense.
Yeah, and Marco, if I could chime in here real quick as well.
Yeah.
Uh, I would say, in my experience, 50+% of the investors I work with use some form of retirement account, whether it's a self-directed IRA or a solo 401k, or, people who are constantly or moving into retirement who have old 401ks and have never heard of a rollover, but decide to roll over to a self-directed IRA. We're pretty well versed in that. We have a lot of good contacts in the industry. So if you have questions on that, feel free to drop it in the chat box. But yeah, these are very, very ideal for a predictable income stream, a cash flow stream into a retirement account.
Yeah. Yeah, definitely. Thanks, Nate.
Yeah.
So just a real quick chart that I put together on the returns of what most people would call traditional investments. Like CDs are not even a consideration for me. I don't know why anybody would invest in a CD. It's worse than even money market accounts. So a certificate of deposit I just refer to as a certificate of destruction. It's destroying the purchasing power of your dollar. Now gold has improved, I think, since this chart that I put together. But again, subpar bonds. Again, depending on the type of bond you're involved in, can be 1, 2, maybe 3%. Again, subpar. I'm not covering every single type of bond or option here, of course, but you get the point. Treasury notes again are somewhere around the rate of inflation, the CPI. The stock market, if you consider the S&P 500, it's kind of interesting because you can be in the 7 to 8, maybe even 9% per year range if you just set it and forget it and average it out over the course of years. Mortgage notes, as I said before, can be 6 to 8%, could be less, could be more, but they're somewhere in that area. With the stock market, if you've got dividend paying stocks and you reinvest those stocks and compound those returns, the dividends, then you can get as high as 10% or sometimes more. You're basically juicing up your returns because of that compounding, that reinvestment. But again, the stock market is not for everybody. Some people love it, some people don't. It's got, what some people refer to as volatility. It can change from year to year, and it does. But it's an option. The green bar is basically our promissory notes. The Norada Capital's notes pay either 12% or 15%. It could be more with our bonus if you're at that tier, but it's essentially 12% per year, 15% per year. So it's a viable option for someone looking for a higher yield that wants to lock in for a 2-year term or longer. That's your choice. But you can compare that to other options. And this is not to suggest that you go all into one thing. There's an argument to be made for some level of diversification. Warren Buffett would kind of argue against that, saying, just put all your eggs in one basket and watch that basket closely, and know what you're doing and know what you're investing in. But, two schools of thought. All right, so here's the real question. Are you protected? Are you protecting yourself? Are you doing what you need to do to protect your savings and your retirement income against inflation? Some people think about this. A lot of people don't take action on this. And that's kind of the shortfall of where people miss out on the opportunity, which goes back to what I was saying before, that ignorance is expensive, because if you really don't know what questions to ask or what to do in order to protect your savings and your retirement income, you are missing out on the opportunity to protect your purchasing power or make larger gains. And the sad thing is again, going back to ignorance, is if you don't know this is happening, you, by definition, that's what ignorance is you just don't know what's happening. So it's good to be aware of it. So we're talking about promissory notes now, and if you look at Norada Capital's promissory notes as an offering, it's basically an offer for accredited investors primarily. There's an exception for non-accredited investors. You'd have to talk to your investment counselor about that, because there's a stipulation in play for that. But it allows investors the opportunity to invest in our promissory notes, our corporate promissory notes with double-digit fixed rates return. That could be up to 15%, as I mentioned before. It's 12 or 15. So it's just offering you predictable monthly income. So in bullet point form, it basically means this: you have fixed double-digit returns. It's predictable monthly income. It's just automatic deposit through Bill.com right into your bank account. It's truly passive income. That's the type of investment it is. We've been doing this for a long time. No default history since 2012. We've been involved in all kinds of asset classes, from oil and gas to real estate, primarily real estate for 3 years. And then we transitioned to Norada Capital, where we diversified, if you will, beyond real estate, because we couldn't get the yield that we wanted to in real estate, in buying, fixing, and flipping literally almost 300 single family homes in the Midwest. So that became what we're going to talk about here in a minute. A couple other different asset classes, if you will. So our fund is well diversified. We have over 25 business assets. It's basically in 3 buckets or 3 categories. And that's exactly what we're going to talk about here for over the next 3 slides. And then we'll close it up talking about, the offering, the investment itself. Nate, I'm going to pause for 1 second here and just throw it over to you. Is there anything you want me to cover up to this slide before I get into like the 3 buckets of diversification that we're in?
No, I just wanted to, reiterate the piece on the retirement accounts. I did, just so you know, I did answer one question here for an attendee. Just typing in, somebody asked about balance sheet, which we can get to. No problem there. But no, I think you've hit everything on the head so far, Marco. I think the most important piece is helping our potential listeners understand what's backing our promissory note, what's backing our fund, which is, I think it's unique, right? I think it's very unique what backs the actual note, what backs the fund, because it's not just your traditional real estate note. So I think diving into this is perfect.
Okay, cool. All right, then let me jump into it. So there's three categories, or 3 main buckets, as I call it, as far as the asset classes or assets under management that are on the books for Norada Capital. Let me get this thing to work here. The first is what I refer to as e-commerce or e-commerce businesses. I think most people understand what e-commerce businesses are. I could spend over an hour just on this one slide, and obviously we don't have the time to do that, so I'm going to have to go quickly through all these. But long story short, about 3.5 years ago, almost 4 years ago, we ventured out into the e-com space. I started off personally investing in that with my business partners at the time. And then that very quickly, there was so much opportunity there that it quickly led to Norada Capital, for the formation and birth of Norada Capital, because it was almost like syndicating a real estate deal. I realized, man, I really need millions and millions of dollars to be able to participate in the revitalization, the acquisition and revitalization of these name brand business assets. So again, long story short, the first acquisition we made was Dress Barn, which was a nationwide retailer for women's apparel. It's now, male and female. But we basically made them an offer and bought the intellectual property, and we own and run dressbarn.com. So Dress Barn is still an operating entity in our own holding company online. So you can go there. We've got a team merchandising and selling goods and services literally every day. And then that went on to Pier 1. Pier 1, filed bankruptcy. They closed all the stores. We bought all the intellectual property from them. And it was a great investment. It was a $31.5 million investment, but Pier 1 was a $1 billion business twice. And so we're on the path now to rebuild Pier 1 online, and then ultimately there'll be some very select stores in time. But that also includes linens and things. We acquired Steinmart, Model Sporting Goods, for those of you in the Northeast, Franklin Mint, for those of you old enough to remember the Franklin Mint. And then a unicorn on this page is bodybuilding.com. That we are turning into a $1 billion company. It receives 48 million visitors a month on the website, and the merchandising and sales opportunities there are enormous. And so again, I could spend an hour on this slide, but you get the point. The next,
Mark, if you don't mind, can we pause there for a second?
Yeah.
Yeah, I want to show people a couple of things. I'm going to share my screen for a second.
Sure.
It was funny. I get this question sometimes from clients. They say, "Hey, so I visit one of your sites, or I want to hear, can I actually buy product on your sites?" And I'm like, "Yeah, absolutely." So I just want to show people real quick a couple of the sites, a couple of the businesses you mentioned. So, it's we can show people the validity, right? Particularly bodybuilding.com, because people get confused about what bodybuilding.com is. They think it might be like a like bodybuilders, right? So, uh,
Right.
is my screen sharing it or no?
No, you haven't shared it yet.
Okay, I thought maybe I shared it here. Give me 1 second. So,
Mhm.
sorry guys to put a pause in there, but I think this definitely it makes sense to me. So give me 1 second here. So here you go. So
There we
yes, if
go.
you guys want to go to any one of these sites, you can certainly buy product. This is bodybuilding.com. As Marco said, this gets 48 million plus viewers a month. It's supplements, it's nutrition, it's things like that. I actually, so I never told you this, Marco, but long story short, I used to powerlift in college way back in the day, and we'd use this site. I mean, this site's been around for a long time, right? So you can buy. I bought stuff on here before. Here's Dress Barn, your first acquisition, right? Got the actual rights to it. Rebuilt the websites. Here's Pier One, right? So these are all real time examples of businesses. And yes, you can go on right now. You can buy products. They're fully fledged companies. So I just want to. I like sharing that so people can see that. Um, so I'll stop here.
Yeah, no, I appreciate that.
Yeah, of
And
course.
and we have full-time staff that
Yep.
manage these sites and are responsible for the marketing and merchandising of the goods that you find on these sites.
Yep.
And so we have relationships again. This is a separate presentation, but we have relationships with suppliers that provide us the inventory that we sell on those websites.
Yep.
So anyway, I think it's exciting to talk about, and for the sake of time, I'm just going to keep going here.
Yeah. So thanks, Margaret. Thanks for indulging me.
No, I think you indulged me, so this is good. Okay. Um, so when I go to this slide, what I call our education section or educational mastermind businesses, very, very, very exciting for me and my whole team, Nate and our whole staff, because a lot of them have experienced going to one of our Aspire events, the Aspire tour that we do every month in a major city around the country. Nate's probably putting the link into the chat box or
Yep.
the chat box. Aspiretour.com is where you can see where our next events are. Orlando's coming up in a few weeks, so if you're in Florida, let me know, let Nate know, let me know if you want to attend the Aspire event. It's in Orlando. After that, it'll be at the theater at Madison Square Garden in New York on July 20th. We expect 6,000 attendees at that event, if not more. But it's very, very exciting what we're doing with these educational masterminds. It's beyond a movement and it's beyond a brand, or it's beyond a business, beyond a brand. It's now a movement. Even like everybody's taking note of what we're doing. Forbes has dubbed Aspire the largest U.S. Business tour.
Yep.
It's better than that. I'm butchering what they said, but we're definitely on the map. It's an incredible movement, and Aspire is a one day. It's a one-day event with Kevin O'Leary, Marcus Lemonis, Sarah Blakely, um, Alex Rodriguez, uh, David Goggins, you name it, like Gary Vaynerchuk, all kinds of amazing speakers that provide education and content. And we expose people to our ecosystem, which is the Money is Mastermind and the Level Up Real Estate Mastermind. And that's our goal in this business model, is to drive people into Aspire, through Aspire, to our master classes and ultimately our mastermind. And that's where we monetize this business model. This is a very significant business model that will all collectively have a billion-dollar valuation as well. It was last valued at $400 million collectively. That's probably higher now. In fact, I'll probably know by Monday, if not Friday this week, because they're redoing pro formas within the company and revaluing everything. Aspire actually will soon be valued close to 150 million. So it's pretty exciting what's going on right now. But we've got we've got, I heard Andrew, my business partner, say we now have officially the largest mastermind in the world with Money Is, close to 2,000 members paying, anywhere from 15,000 a year and up. So just stop and think about that. It's when you have annual reoccurring revenue of $15,000 per member with a high resubscription rate, and we're bringing more people in literally every month. How do you put that into words? I mean, it's pretty enormous. So anyway, as you can tell, I have no excitement about this section. But it's fun. So this is a business model that my two business partners and I started talking about almost 4 years ago, a little over 3 years ago, and put into practice. And it's got a lot of momentum right now. Okay, so that's the other significant section. This makes up actually roughly about 55% of our fund. And then just to put a cap on the rest of it here, we have a very small component of co-producing Broadway musicals, theatrical productions. Most of them are in Broadway. The one you see here, Devil Wears Prada, that's actually on the West End in London. But right now, the Neil Diamond musical's running, A Beautiful Noise. The Notebook is running right now. There's a few more that are not on here that I have to update this slide with that are running right now, including Tommy from The Who, as well as Cabaret. And let me look. I have to look at my wall for all the different posters. So anyway, this is another component. It's a small portion of Norada Capital, but it's an exciting part. And it can be a very lucrative part as well. This provides passive income for Norada Capital, but at the same time, when you hit a home run like a Wicked or a Hamilton or something like that, it could be worth literally tens of millions of dollars. So, all right. And I'll wrap up this section by just saying we have a small real estate component and a small media component with the Pickleball Media Company. And really, there's not too much more to say about this. This is kind of like, a less than 5% of the fund. All right. In wrapping it up, and I know, Nate, I'm going to cover this and then throw it back to you. So if you're interested in investing in a promissory note with Norada Capital, it's basically this. You have two rates of return, 12% or 15%, and then there's a bonus level. And it really comes down to the amount invested. If it's 50,000 or more, you're getting 12% per year, paid monthly. If you invest $100,000 aggregate or more, it's 15% per year. You have a choice. You can do a 3-year term, a 4-year term, a 5-year term. We advertise up to 7. This slide says up to 10. We can do between 3 and 10 years. It's your choice if you want to lock in a long term, a short term, but you choose the term. The rate doesn't change. Payments are made monthly. They're interest payments through direct deposit. It goes right into your bank account every month. And so it just shows up. We use bill.com to facilitate that. For investors, and we have many investors, but investors that are at 200,000 or more, at the maturity of their note, when their note matures, they get an extra 5% bonus as a kicker, if you will, or an incentive to invest more with us, whether in one time or over time. Then the repayment is when your note matures. The principal is repaid in full at that point. The minimum investment is 50K, and the pay date is the first week of each month is when the funds are sent to you through ACH, like direct deposit. So noradacapital.com/profile is where you kind of shortcut everything and just go straight to the profile form without necessarily having to talk to anybody. But I highly, highly encourage you to talk to Nate or one of our investment counselors, just so we can answer questions and we can make sure that this is a fit for you and you're a fit for us. But if you go to the profile form, as you see on the screen here, you're basically going to see this. I basically cut the page into two, the left side and the right side, but it's one form. It's like 10 fields. It'll take you 2 minutes to fill out. And once you fill it out, it'll send you a DocuSign. And then you could just review that. That is your promissory note with all your, disclosures. And if everything looks good, you just sign the DocuSign. It'll go back to me. I sign the DocuSign, and then we have a completed note. And at that point, the ball's in your court to just fund that investment. And we'll set you up on direct pay, and your investment interest starts right away, but you'll start getting your regular interest payments the following month. All right, I went fast, Nate. I talked as quick as I could to cover it all.
Pretty good, man. 256 on the mark on the East Coast here. Obviously, 1156 on the West Coast. Yeah, I'm going to reiterate real quick, guys. The profile form takes you 5 minutes. One thing to notate if you are going to get started with us, if you're using a retirement account, self-directed IRA, in the note holder section, please notate that it is an IRA. The last thing we want to do is try to go execute a note, and then last minute find out that the titling's incorrect or the information is not correct in the note, because it can slow things down for you. But great presentation, Marco. Thank you for taking us through that. And let's shoot over to some questions. Got some good ones. I think we can get through these rather quickly. Do you have a hard stop, Marco, at the top of the hour?
I don't think so.
I know I have a, let me check my calendar real quick here. I can get through most of these with you. I do have
Okay.
a
I'm
call
good.
here right at 3 o'clock.
I'm good.
Um,
I'll just start taking some of them myself here.
yeah,
So Sean's question: are the notes fully amortized? No, they're not. They're interest only, and so you're getting paid whatever the annual interest is paid into 12 monthly installments or 12 monthly payments. So you're actually not having to wait a quarter or a year to get the interest. You're actually getting 1/12 of it every single month, automated. We don't even have to touch it manually. We just set you up on Bill.com. So good question, Sean. Thank you. Let's see. Nate, do you just want me to go through myself?
sure. Yeah, I was gonna say if you're gonna.
I guess you don't need to moderate the questions, but if you see one that can be replied to, just reply to it and take it off the Q&A.
Yep, I will.
Okay, so anonymous, whoever anonymous is, are about accredited investors. How is this verified, and are there investments where those requirements are not necessary? Great question. Let me touch upon this for those who are wondering, well, am I accredited or what is accredited? So the SEC has a definition of what it means to be an accredited investor. And that means you're one of two things. You either have a net worth of $1 million or more, and that means it includes everything that has value. And most people don't remember to consider the equity they hold in one or more businesses. Even if you're not a full owner of a business, there's value to having equity ownership in a business that could be significant. You got to count that. But anything and everything that has value, from investments to commodities to your houses and whatnot, you can't include the principal residence, though. That's the only exception. So $1 million or more in net worth, or if you have an annual income of I think it's 250,000 a year for 2 years.
200.
Yeah, it depends if you're married or single, but 200 or 200,000 per year for 2 years will classify you as accredited. And any professional like a CPA or an attorney can just simply shoot you a letter saying, yeah, so I know so-and-so, they're accredited, and that's all you need. Or you could self-serve. You can go to a website like verifyinvestor.com, and it's 5 minutes. Self-serve website. You just fill in their forms, upload whatever they're asking you to upload, and then usually the same day they'll send you a letter saying, yeah, so-and-so is an accredited investor, and that's it. I mean, you really don't need more than that. It's really just for us a CYA. But that's all you need to show. I think you can self-certify yourself as accredited. I'm not sure if we're supposed to be doing that, but you could technically do that. Okay, let me see. Carl, fees associated with promissory note investing with Norada. Thanks. No, it's not like a 2 and 20 fund or anything like that. There are no fees. We're not taking a fee off the top of your principal. Your 100% of your principal goes to work, and 100% of your principal is earning interest. There's no fee that's deducted from that principal, because we're using that principal to build and grow and scale our business empire, if you will. And so our revenue, our returns, if you will, comes from the revenues and equity growth in the businesses. So thank you, Carl. Mark, can you add to your investment, like in reinvesting distributions, or at what amounts? Mark, what you're talking about, I think, is just compounding your returns or reinvesting the interest. We're not set up to do that. I get asked this every once in a while, and it's it's almost like pushing me into the direction of creating that as an option where someone can reinvest their interest to compound it. I don't know if we're set up to do that. I have to talk to my bookkeeper and my CFO about it. So the short answer is we don't have that ability today, but is it a possibility? It can be, you know, in the near future. So I'll look into it. All right. Anonymous again. Are there benefits to a longer term commitment, 7 to 10 years versus the 3 years? The only benefit is locking into the longer term because we're not going to be offering these notes forever.
Right.
In fact, you know, our projections are that we're going to wean off of this starting in about 18 months, maybe 24. And so it'll slowly and then quickly go away. So if you're on a, let's say even a 3-year term, and your note matures in 3 years, and we don't have this offering on the table anymore, then you won't be able to reinvest because your note is matured and we're not renewing. But if you lock into a longer term, then you get the benefit of that 15% per year for however long it is. And this is especially good and true if you are investing in a self-directed retirement account of any kind, because then you can lock in for a longer term and benefit from that, not having to worry about it in 3 years. You could, you know, make it a 5 or 7 year note. So the benefit is just locking into a longer term. It doesn't change the rate of return. It just means that you're going to get that return for a longer period of time.
Correct.
All right. Sonia.
Yeah.
Interesting question. Never had this one before. Hi, Marco. How many employees does it take to run one Aspire Tour event? I have to guess that you probably attended Aspire if you're asking that type of question to see the monumental production that goes on. What you don't see what goes on behind stage and in the side rooms. And basically our audio video staff and, you know, the 18-wheeler that we truck around from city to city with all the equipment in addition to a mid-size cargo van. We have collectively, we have between 70 and 80 employees, and then there's some contractors and volunteers. We also have volunteers that come to the events to help us, you know, direct traffic and whatnot. And they all wear, you know, the purple Aspire shirt that says Aspire on it and all that. So I think all hands on deck, there's probably 60 to 80 people involved, you know, employees and otherwise, per event. So yeah, there's a lot of people there. Definitely come in and attend. Like if you haven't been to an Aspire event, definitely come.
Real quick, Joseph's question there. Joe, if you can access your pension in 7 months, it's as simple as connecting with a what's called a custodian, and you do what's called a rollover. So you'll roll those funds over from your current employer to a new custodian. Once they're with that custodian, you can invest in a promissory note. As long as you're allowed to, as long as the union allows you to roll those funds over. So, you know, if they allow you to do that, it's super simple. You're just rolling those funds over to a retirement, a like retirement account. It's actually a non-taxable event. So.
Anonymous is asking for year-end taxes. Do we receive a 1099 INT form? And the short answer is yes. Yeah, every January we're going to send you the applicable 1099 if it applies to you. If it's in a self-directed retirement account, that typically does not apply. So, but yeah, you would receive a 1099 form. Yeah. Gerald, I think I answered the question. On a longer term note, say 7 to 10 years, do you offer a principal and interest fully amortized option? No, we don't have a fully amortized option at this point in time. Nate, any comments on that?
Nope, not at the moment.
Okay. All right. Let's see. Michael, is it possible to attend the Aspire event in New York in July? Question mark. I'd love to get an idea what the business is all. Michael, you and everybody listening to this, absolutely go to aspiretour.com. Nate put it in the chat, but it's just simply
it's already there. Yeah. Yeah.
Yeah, just aspire with an A, like I aspire to a higher height. Aspiretour.com. And yeah, July 20th, we're going to be at the theater at Madison Square Garden. We locked that down a couple months ago. Wasn't a cheap venue, by the way. But yeah, we intend to get 6,000 plus people at that event. It might be 8,000. It'll be a lot, but please, yes, attend if you're in the area and go. You'll love it. And then if you do go, or do want to go, reach out to me and let me know that you're going. I would love to meet you there.
Yep.
And whoever else is listening to this and is planning to attend, I would love to shake hands, meet, and show you around a little bit if I can. So yes, please. Like, I look forward to seeing you. Which one? Can you self-verify the verify me? Or is that something you do? No, you do it on your own. Verifyinvestor.com. It's self-serve. You go there by yourself. You don't need us to do anything on there. They're just going to verify you and then send you and email you a certificate saying you're verified. Yeah, and Nate just put it in the chat box as a quick reference for the link. So verifyinvestor.com. Jennifer says, I have a formal trust. Oh, I didn't finish reading that whole thing. Let me just see.
Oh, sorry.
No. I have a formal trust. I am the trustee for 6 beneficiaries. I'm not sure how that's going to work. I'm not sure if you need to verify the trust or just yourself as the trustee. I don't know the answer to that, unfortunately, Jennifer.
They have a great customer service section at Verify. Like if you call them or email them, they'll be able to answer that for you.
Yeah.
Yeah.
Um,
Real quick, Dave Cook, the interest payments count towards the IRS contribution to my. No, it's not a contribution. There's a difference between the interest that you make on your investment versus a contribution. So you can still contribute your maximum. Let's say you have an IRA where you can contribute 6,500 a year, right? You can do the 6,500 a year, and you can still make 15% on interest payments annually as well. So, yeah, the interest payments have nothing to do with your contribution limit that we're paying you. So, good question, Dave.
Yeah, and Coach said the accredited investor definition should be added to the slide, so I'll do that. So thank you. We're only a couple of questions left. We can wrap it up.
Yeah.
Not sure what Jerry's asking. Is the principal paid as a lump sum at conclusion of the? Oh no, yeah. Yes. So the return of the principal is paid in full at the maturity of the note. In the interim, each and every month, you're getting your interest payment on whatever the rate of return is, like 12 or 15% per year, paid monthly. So yes, you get that in the interim, and then the principal's repaid at the maturity of the note.
Yeah.
Yep. Anonymous again. I was under the impression that this was to learn how to get funding for flipping homes.
Nope.
Wrong email.
Yeah, definitely not. We do have we have Marco has a company called Norada Funding that funds in passive income real estate purchases, does fund rehabs if the ARV is there, if the value is there. But that's not what this presentation was for.
Yeah. And for that person, if you go to noradafunding.com, you'll see the different options. There's buy and hold, like long-term buy and hold. There's fix and flip. There's bridge loans. There's short-term loans. There's a whole portfolio of different types of loan products. So just go there and you can see the different options, and then you can, if it's something you're interested in, you can either fill in an application there right off the bat, or you can contact Kathy if you want to get a little bit more of a deep dive into the different funding options for your needs and the terms available and the rates. Those change weekly, if not more frequently. So again, it just depends on what you need. But yeah, there's different types of real estate based lending options at Norada Funding, but it's still in-house. We're still, handling for you here. Okay, one more, Tom, because we're 10 past the hour and we should have wrapped up like 10 minutes ago. How to weigh benefits between a cash investment versus one inside solo 401k? Well, that's a tax related question. I'm not a tax advisor. I can't tell you one is necessarily better than the other. It really depends on what you want, what your needs are. But it's not necessarily either or. It can be both. It can be this and that. So you can invest if you're sitting on a chunk of cash and you want to invest it. You can invest that outside of your self-directed account, like your solo 401k. But if you're trying to, earn yield and generate a return inside your solo 401k, you can't commingle your funds, your personal funds, with your self-directed funds.
Right.
So they're really two different things. You can invest using your solo 401k, and or you can invest using your personal cash, your savings, or your business accounts, whatever it may be. So those are two different things. Don't think of it as either or. You could do
It's an
one
and.
or the other,
Yeah.
or both. It really just depends on, you know, what you're trying to do inside and outside of your solo 401k. So yeah, I guess that's kind of a personal tax decision, and maybe one for your tax advisor, but I don't even think it gets to that point, you know. So, all right, well, we're 12 after the hour. I think we should probably start to wrap it up, or wrap it up. So I'll
Yeah.
throw it over to you.
No, I think we hit the nail on the head, Marco. Thank you for the time today, as always. Great questions, guys. And again, this is recorded. We'll be sending this out to you in the next probably 48 to 72 hours. Keep an eye on your inbox, also your spam folder. And we look forward to chatting with you again next week.
Thank you, everybody.
Thanks,
Appreciate it.
Marco.
Thank
All
you,
right.
Nate.
Take care.
Bye-bye.
Bye-bye.